Hey everybody, ready for 401k here? Just wanted to get a quick video out looking at the SPY. I think it's good for us to kind of take a peek at some indices right now and the market as a whole to see what's going on. Get us a better sense of better trades to get into, better investments to make. So with that, let's get into it. What I can see with the SPY, it's definitely pushing limits. I know over time as things change in the market and we move towards the future, we can stretch a little more and whatnot. However, with the bigger markets and just markets in general, and as opposed to individual investments, there's rails, there's limitations that it needs to kind of stay within, and if it doesn't, it kind of pulls back to reality. So, a few indicators up here. We'll kind of go through real quick. I'm on the weekly chart, logarithmic scaling, and as you zoom out in time frames, you get an idea. Just looking at RSI, we can see these patterns in sentiment. So it's an ebb and flow. Okay, so we can see historically, looking at it, check this out, right? The sentiment tends to have this nice arc, right? The ups and downs, the corrections that take place. Um, about 2015, 2016 here, it got a little different. So where we should have had, oops, that should have this nice kind of softening. There was more um, uneasiness because you see these hard just bottom falling out, right? You see we had it here, but it's slightly different. They're kind of like it's grading down and then you get the drop to recovery. They have a little more softness to it. It's not happening over very quick periods of time, and I think the market isn't used to that. So the reason why I point this stuff out is because we do appear to be approaching another one of those sort of cases. And what we can also see here is this. If I look, so let's just look at right here. This was in 2018. There we go. So you see the RSI sentiment, right? It's really cooked. It's actually some of the highest that we've seen, right? And it it was just stretching. I've pointed this out before in the past, is that the market has this natural kind of trajectory. We did get to a point where all of a sudden that trajectory changed, and we got outside of this kind of trend, right? And so we can see back here. Let's go back to the 90s, right? We broke above it. Market didn't like it. It corrected down, and we actually went into a depression. And depressions are longer lasting than a recession. Okay, depressions act for long periods of time. So when we finally broke down, it was August, September of 2000. Our official recovery wasn't until 2003. So we had about 3 year span, almost 4 year span of recovery. Well, we're starting to kind of do that again. So you can see here, we look in the past, right? What happens in the past is a kind of a good indication of what's going to happen in the future. It's like an echoing. So we can see that we had the same thing. We were getting above it. We had these breakdowns. We had these kind of massive drops in recovery, climb up, and we were just signing at the peak, right? Okay, well, let's go forward in time here. Let's scale this a little better. And you can already see what I'm looking at, right? Same thing's happening, right? We had these breakdowns. Okay, we're climbing. We may get in. We may go another, 6 months and get up here, and all of a sudden it starts dragging down, and it's going to last for 3 years. or 4 years, whatever that looks like. We may get into 2022 and then we go into a depression and we don't roll out of it until 2025. So this is the kind of stuff that I'm really trying to be mindful of. I've done stuff in the past where I was looking at more of the finite, the daily, and charts, and I gotta remind myself that the market in general has a longer lifespan. So you need to actually work monthly to weekly to daily and see what that pulse looks like. And it works in that fashion. It's gonna, when we have recessions or market crashes or depressions, they don't just happen 1 and 2 days and then all of a sudden you're good to go. It draws out for long periods of time, much longer than what we would see with necessarily like a individual equity or stock. So what I'm seeing here is that the sentiment on the RSI is trailing down. It is doing a downtrend. So we are definitely seeing divergence. The argument definitely would be on this that it is bullish divergence. However, looking at kind of the price action and seeing these collapses, I don't necessarily think of it as being bullish divergence. So let's see here. So we can see right here this kind of broadening channel. So I would expect that our sentiment, probably here pretty soon, we are going to probably experience. So you see these hit these highs, right, and it collapses down to this bottom trend line, and then it starts recovering out and kind of waking out of it, and then it starts trying to climb up again, but still after a period of time it hits this high resistance, this downtrend again, and then it collapses, wakes out of it a little bit, and we can see right here. I'll have to go through this way. You can see this, right? We can see that it hit this kind of high point in our sentiment channel. Well, we just hit that high point in the sentiment channel, which happens to be right coinciding with the downtrend on the sentiment. So I'm going to expect something like this to occur. So this was September of last year. I'm sorry, 2018, and it corrected down to October, so about a month, and then in December we finally start coming out of it. So we could see it rattle for a second, and maybe we see it do this. Right now, how low will it go? I don't know. Will we see something going into August, September, coming down to this point? I don't know. Who knows? We could very well see. There's something like this going on with RSI. So here, this is to remember: is you can always you can find patterns and trends through this. You just need the confirmation, right? Because we need to backtest this stuff. So I can see here that I have a contact point, contact point, contact point, contact point, contact point, right? So this could very well be the support trend on the sentiment. So, okay, does that mean that we're then going to hit this? We're going to rattle. It's going to get tighter. And then, does the market fall off? Does the market break? The way this is sitting, I don't necessarily know if it would actually go to this upside. I think there is the inflation in the market, not necessarily the inflation that everybody thinks about, but I think a lot of things are inflated. So we probably will see some of those sell-offs. So right now, there's a lot of momentum, and there's opportunity to do some momentum trading. However, I'm not a huge fan of this buying at a discount mentality when we do see stuff that is like the FANG stocks. They kind of crash, the market dips for a second, and then it kind of continues on its merry way. Because when you have this mentality mindset of buying at a discount, quote unquote, right? We're not actually letting the market do what it has to do to course correct. So if we're accumulating or trying to buy on these downtrends more, faster and quicker than the trend needs to go, we're slowing it down. We're trying to bring it back up. And so, this can only go so long, especially when we start to see uh, very weird candle patterns and formations that, I'm looking at the daily chart right now. Um, you know, it's not normal for a stock to gap up and then trend and then go down, right? So we shouldn't see example, right? Let's go right here. This candle, zoom in even more. Let's get up close and personal. So what I'm looking at, this candle here gapped up, but crashed, right? And you can see shortly after that, right, the market went down. So when we see those moments of when it's gapping up but going down, or vice versa, when it gaps down, goes up, right? This is another case of it right here. Is it when it gaps down and goes up? Gaps down. Actually, when it gap down here, totally gap down, goes up. So these typically are indications of a directional change. When we see something like back here, right? This is one that gapped up and then it trended down. So this is a dragonfly doji. And you can see how much it went down. And then it came back up to recover. A lot of buying pressure behind that, but it didn't like that. These are unusual candlestick formations and patterns. Everybody has their different method of charting. Some read candlesticks, whatnot. You want to combine all these things together to kind of get a good sense. These aren't good signs. So there's a lot of uneasiness in the market when we look at this daily formation. This right here, which we saw in May, this should have continued down more. So what we ran into was just the forces that be behind the scenes, the Wizard of Oz, just manipulating and stopping this from occurring, and really making sure it doesn't happen. But you can see there's a lot of gapping that happened in this week period of time, because it doesn't like that, and it's getting worse. So we gap and gap and gap, and then it's starting to calm down, because the market, or the investors, are kind of preparing, feeling like it's going to come, and we're going to see the correction happen. So that's also where we see these declines in volume. It's preparation for something to happen. So just as you get into this, I'm not too confident. I am bearish on the market right now, just because it doesn't make me comfortable looking at the way it's performing and what it's doing. And I'm just being realistic here. When you have indicators that are not looking so hot, I think it's about time. And it's unfortunate. It's gonna hurt some portfolios, but we can always do everything we can to hedge against it and just stay safe with our money and our investments. Last thing I will just point out is this: looking at a weekly time frame. I'm a fan of the whole moving average, the HMA20. It's a non-lagging indicator, so we can see this, the movement underneath the HMA20. This is my blue line, and this will guide that blue line to roll over. When it gets disconnected from it, it wants to come back to it. Okay, so when I see this rolling underneath, and I don't see a lot of movement in these candles on a weekly or on a daily to try to change this direction again, it tells me that, okay, we're going to start seeing some rollover. Something's going to downtrend a little bit. Is it going to look like something like this from last year? I don't know. But this right here means, there's, especially what we're seeing to start out the week. I know we're just starting the week, but it's starting out red. And, we get this butterfly doji, or a dragonfly doji on the weekly from last week. There's a lot of buying pressure, not agreeing with the sell-off, but it's just not looking too hot, guys. So um, the MACD, and I know, the only thing I do with the MACD here is MACD is a confirmation for me. MACD is a confirmation of what the sentiment in the market price movement is doing, the momentum. So this battle going on with the MACD and the signal line, these sharp, these adjustments. I've talked about this before about how you should see fluid motion like the signal line. It's very fluid. When you see the MACD have these kinks in it, that means there's some sort of force. There's unnatural force changing its direction. Well, it's going flat, and it's don't expect it at some point to just rip like you see it coming out from a bearish territory, rip up at this point right here. This isn't crypto, right? So I think people are getting their ducks in a row, and the money that talks is trying to prepare and put the safety nets in place that they have to, so that when this finally does go to the downside, they're all ready. Okay, and I do see that occurring here in the next few months, especially as we get into Q3, Q4. Those typically are times of the year that we will see corrections take place. I still to this day believe that we are due for a big one, and I'm talking like a 50% plus correction in the market. So I had done a video before on these broadening formation or megaphone formation, and this is just this is a conflict in the market. Market doesn't agree with the different forces don't agree with each other, and that's why we see this. We see these broadening formations, and so this tells me, I'm again still thinking that we are going to see a correction, and if we keep this up, we will run into a depression, which will carry out for years to come, and so that will look like a drawdown, and whatnot. So if this happens soon, we may luck out and only last for a year, and maybe, okay, we hit bottom over here, 2022, 2023. If we just tear the Band-Aid off really quickly, get whatever happened to happen in the next 4 or 5 months, who knows? But again, it's not looking good. Market isn't too happy. I know I'm not getting into the intraday really with this one like I would typically, because intraday is not the way to go when we're looking at the indices, when we're looking at the bigger market. We need to look at the bigger picture, and we're not really day trading it. So anyways, just wanted to put this out here. Just wanted people to be mindful of it, and just keep your money safe, hedge wisely, and you can always visit us on the moneyvikings.net, moneyvikings.com. We have a bunch of great info there, and tutorials and videos and whatnot, to kind of help with some guidance and show you the things that we do. But always feel free to leave a comment, suggestion, any questions you have. I'm very responsive to them. And until then, guys, just hedge wisely. Take care.